go buy other sectors like healthcare or consumer stocks or whatever, you won't make excess profits. You might still make some money, but you won't make enough. AI is absolutely the strongest trend in US stocks for the next 5 years. Okay, there's no need to doubt this. Just look at the stock charts of AI-related companies, and you'll know. The current main trend in the market is AI. A simple example is Nvidia. After all, Nvidia is the #1 leader in the #1 track of AI. It does chip design, GPU training cards, and so on. It belongs to the top-tier foundational track of the AI sector. Now look at its price action over the past few years. It has shown perfect leading stock behavior. In the last 3 years, its stock price has risen more than 500%, with no major drawdowns in between. If you look even further back at the past 5 years, it has delivered more than 14x returns. In recent years, AI has actually already started to be heavily hyped. Just look at its stock performance. The performance of a leading stock is a straight rise, with no major pullbacks in between. When I say AI is worth your focused attention, I'm not saying it based on feelings or news. It's because real capital is actually pumping it. Nvidia is the most typical example. Every time it falls, the big players quickly buy and add to their positions. For example, at this position, the stock fell 40%, but then look how much it rose afterward. It rose more than 100%. For institutions, a drop of that size is crazy buying opportunity. Even though Nvidia's market cap is already very high, why are funds still willing to buy? Because the capital, the big players and institutions are bullish on the development of AI. Otherwise, why would they put tens of billions, hundreds of billions, or even trillions into buying it, right? So why buy? They buy because they are bullish. If they weren't bullish, why would they buy? It's that simple, right? Through our AI model. We also monitor via AI model that institutions like BlackRock, Blackstone, and Vanguard Group have been continuously heavily buying Nvidia. And since Nvidia is the leader of the AI sector, the first phase leader, the leader in chip design, and it is being chased so aggressively by capital, then shouldn't we think about whether other related AI businesses will also benefit? For example, the storage sector, chip foundry, self-developed manufacturing, software development and cloud platforms, AI models, custom chips, semiconductor manufacturing. All these things will also be chased by capital because Nvidia, as the market's AI leader, has already skyrocketed. Capital is already tightly clustered inside it. They have already pushed the stock price very high. It has already told you. AI is the strongest trend. Now it's asking you, are you in or not? If you're not in, you miss the gains. It's that simple. Understand? A lot of people are still buying garbage stocks, buying very cheap stocks. This is the common disease of retail investors. The thing ordinary retail investors love to do most is buy cheap stocks. They think cheap stocks will have huge upside power. Wrong. Completely wrong. The cheaper it is, the higher the price you will eventually pay. Cheap does not mean good. Expensive does not mean bad. Understand? At least when it comes to stocks, leaders always rise the hardest. The strong get stronger. You have to believe that the stocks institutions are willing to cluster into will only go higher and higher. Capital will push the price very high because capital wants to make money. If you put 100 billion in and you want to successfully make money, you need the price to at least double before you can smoothly sell all your chips. So capital will keep pushing the stock price higher. But cheap stocks have no institutions playing inside them, so they can't produce any decent gains. Did you understand? Without capital clustering, how are you going to push the price? Do you think your few thousand or tens of thousands of dollars as a retail investor can push a stock? You only have the fate of being harvested. Did you understand? Even though this fact hurts, it is the truth. Whether you listen or not, it exists. Only by facing these things directly can you make money. Only by being the most real version of yourself, understanding your own real weaknesses, and fixing them, can you make money. Because trading stocks is a battle with human nature. Understand? Because the biggest opponent in trading is not others. It's yourself. Only after you get past your own barrier can you make money. If you can't even get past the barrier in your own mind, you are destined to lose money. Okay, I just explained why I'm bullish on AI. It's because I am following the footsteps of institutions. Right now in the market, trillions of dollars. Tens of trillions of capital are flooding crazily into the AI sector. So why wouldn't I follow, right? Wherever the capital is, that's where the money is. Wherever the money is, that's where we can make profits. Understand? If you go play garbage stocks where nobody is playing, who are you going to make money from? We can only make money by following the institution's pace through Nvidia's chart. We can also see that in recent years, capital has been clustering and pushing up AI-related companies, especially the leading companies, because it has already gone to the moon, right? At the same time, AI is truly a disruptive force for every industry right now. Whether it's your job, your startup, or any of your hobbies. In the future, you won't be able to escape AI. AI is like real estate back in the day. It's a massive trend. Understand? And AI has only just started. A lot of things haven't even landed yet. For example, humanoid robots haven't officially landed yet. So AI still has huge development potential ahead and huge hype space. Understand? Even though many experts say AI is in a bubble now. Of course there's a bubble. How else are you going to make money? Tell me, without a bubble, can you make money? If you can't even blow up a bubble, how are you going to make money? And right now, the bubble is not big enough yet. Understand? In any industry, only when there is a bubble can you make money. Without a bubble, you can't make money. We just need to embrace it while the bubble is developing. Make money during the bubble's growth phase and run away in advance when the bubble bursts. Can you understand? If you think what the host said makes sense, type 1. Okay, maybe no one has ever told you these things. But today I told you. Do you feel something now? If you feel something, type 1. Smash the like button. Hit follow. Okay? Later I will share with you more inside stories of institutional trading, more accurate signals from the AI model. I will share and exchange all of them with you. Okay, back to Nvidia. Look at this position. A while ago, when the whole US stock market was crashing hard, Nvidia's stock was almost making a new high, right? Actually, at that time, I was also posting videos reminding you I set Nvidia as the leader of the AI sector. The first phase leader is the most resilient, and its upside will also be extremely violent, right? So if you understand AI, then your positions this year or next year should not be buying stocks from other sectors. You should stare at AI, the upstream, midstream, and downstream industry segments inside AI, and the leading companies inside those segments. That is the logic for your future investment. Understand? Did you get it? I'll say it again. In the next 2 to 3 years, what you should be doing in US stocks is to stare tightly at the main line of AI. The AI main line is divided into 3 phases: upstream, midstream, and downstream. First phase, for example, the leader in chip design, Nvidia. Second phase, for example, the leader in software development and cloud platform services, Google. Second phase, for example, companies related to AI storage, Seagate Technology, right? And third phase, for example, power supply, power management. These kinds of leading companies are also worth our attention. So we follow the main line of AI. To find the leading segments in upstream, midstream, and downstream, choose the leading companies inside the leading segments. Wait for the stock price to have a reasonable pullback or appear at a cheap price. You only need to heavily buy, and you can get rich. Remember what I said? I suggest you hit follow. Listen carefully. This concerns your wealth for the next 5 years. Whether you can actually make money in the next 5 years. Did you understand? Okay, so following this main line, I will recommend some stocks I quite like one by one. For example, the first one, obviously it has to be Nvidia. Nvidia is the leading company in first phase chips, graphics card design, production, sales, no one else comes close. It is the leader among leaders. So in the coming period, you must focus heavily on Nvidia's movement. Even if you don't trade Nvidia itself, you can use Nvidia's movement to see the current market capital's attitude toward the AI sector only when Nvidia is not falling, or when Nvidia keeps making new highs. If you buy other AI-related companies, you will most likely make money. If suddenly it can no longer rise much, I suggest you be cautious, because the stock price may pull back. Just wait for the next opportunity then. So you can treat Nvidia as your heavily traded core holding, or as a market barometer, especially the barometer for the AI sector. Did you understand? Now let's look at Nvidia's recent movement. In the last 1 or 2 videos and live streams, I already reminded everyone. I said Nvidia has reached a critical position. Why is this position critical? Let's take a look. First, find the previous high. At the previous high this position, after making a new high, the stock price pulled back. This means it formed the main force zone for price. What does the main force zone create? Selling pressure. Selling pressure will cause the stock price to pull back. In the last 2 videos, I reminded everyone. I said around $200 is an important barrier. It is also its lifeline. The make or break key point has arrived. Okay, do you want to hear why this position is a key point? If you want to hear, type 1, okay? Smash the like button, brothers. Smash likes. I'll continue. Push the likes up for me. Okay, smash follow, smash likes. At this position, look. Isn't the previous high in this range? Around $200. This is the recent highest new high. The highest new high. A new high that then falls creates selling pressure for the later trend. Because the stock once made a new high, back to the knowledge point I explained earlier. Why can't the stock hold after making a new high? The price pulls back, doesn't it form a big decline? It can't rebound. After new high, the stock falls back again. This kind of movement is a short-term top signal. The high of the short-term top signal forms selling pressure for the later trend. I mentioned this position earlier. After the stock made a new high, it printed an inverted vertical line. Very long upper shadow. Very small body. At this moment, what signal is it? Answer in the comments section. What signal is this? I'll give you a few seconds to think. After the stock made a new high, it printed an inverted vertical line. The performance of an inverted vertical line is a very long upper shadow. Very small middle body. And it printed 2 inverted vertical lines in a row. Think for yourselves. I just explained it. This position is exactly what kind of dangerous signal? I just explained it. If you take out what I said and review it repeatedly, you will understand. Everything I teach is effective. Everything I teach has been battle-tested and summarized by us. No one else will teach you this. You won't hear it in any other live stream. Okay, the appearance of an inverted vertical line at this position is a dangerous signal. A sell signal. Then, our AI quantitative model gave us a short signal and sell signal. A top signal. The stock price crashed. See it? Everything was within our expectation. The stock price fell 15% until a key candlestick appeared. This position, the key candlestick is here again. I said earlier, where there is an inverted vertical line, there is a vertical line. Where there is a vertical line, there is an inverted vertical line. What is the vertical line? Answer me, brothers, comment section. The inverted vertical line is a top signal. What is the vertical line? Like a hammer smashing downward. Didn't I teach this? Then, when you see this kind of candlestick, what should you do? Shouldn't you buy? Especially when it falls to an important support level, combined with price action itself. When a key level shows a vertical line, the subsequent price also rises. It rose to around $200 again. Okay, so whether it's an inverted vertical line or a vertical line, I have explained it clearly to everyone. Now back to what I was saying. Why is this position selling pressure? Because after making a new high, the stock price fell back quickly and printed an inverted vertical line that formed what for the later trend? Important resistance. So, the current price has already approached this important resistance, around $200. At this position, be careful. So at the current position, I will not heavily long Nvidia anymore. At least not in the short term. I will not heavily long in the short term. Because at this position, the price may see some pullback. So only very foolish people, ordinary investors who don't understand, I will think, oh, the stock is rising. I need to chase. If you chase, you lose money. Okay, because you can't read price action itself. You can't read options orders. You can't read the massive data telling you that around $205, $207 has formed what for the price? Important selling pressure. Understand. So be careful at this position. If the price rises to this level again, Be very careful. It may pull back. We'll wait and see. Now, if you currently hold long positions, you can reduce. If it attacks to around $205, the price may pull back again. It's even possible to crash again. Understand? This is Nvidia's recent movement. Now look again. I said real traders will not buy around $200. Why is that? I already explained earlier. Don't listen to news. Even if there is positive news right now, I still won't buy again because the real buy point was around $170. I just explained. The lows of the butterfly pattern form the bottom, right? The lows of the butterfly pattern form the bottom. Two lows, bottom. What did our AI quantitative model give? Buy signals. See it? Buy signals. Here too. Both of these buy points you could have made money on. First order 13%. Second order currently 20% profit. Right? So how could you possibly buy around $200? Around $200 was already my take profit zone. Only ordinary investors buy around $200. Okay, if we want to make money like professional traders, like institutions, we have to buy at the low, when others don't dare to buy. Understand? Let's look even further back. Same movement. Butterfly pattern appears. Buy at the low. Basically the current bottom position. This position was also a bottom. After buying it rose 20%. So, if you have our AI model, it's really hard for you to lose money. As long as you strictly follow it. And I said, this kind of stock, the sector leader inside the AI main line, is absolutely worth you trading long term. The long-term gains will not be weak. Once you catch it, it's multiple times return. And these stocks you dare to heavily position because they are not garbage stocks. Did you understand? If you understood type 1, okay, if you understood type 1 and smash likes, more likes, I'll continue, okay. Because its current movement has been explained very clearly. Right now, you need to watch its behavior around $200. If around $200, it starts printing bearish candles, printing these inverted vertical lines. Right, I explained it clearly. When inverted vertical lines appear, you need to be careful. Or if it prints a weak bearish candle, a big bearish candle with volume expansion and big drop, you need to be careful. Did you understand? One is the inverted vertical line. Very long upper shadow. Let me draw it simply for everyone. Long upper shadow, then very small body. When this kind of inverted hammer appears, be careful, or it can directly wick down, even if the body is large. But if it wicks, still be careful. Okay, of course there is the scariest movement. I can also explain it to you. If this movement appears, then just sell directly. Another movement is this kind of big bearish candle. Candlestick closes as yin line smashing lower. Volume expands in sync. Volume expansion with big drop. At the high, volume expansion with big drop is a top signal. Understand? Volume follows price with expansion and big drop at the high is one of the short-term top signals. Dangerous signal. It is as dangerous as that inverted vertical line. Did you understand? So, everyone should pay attention this week to its performance around $200. If it prints the two kinds of candlesticks I mentioned, then wait for the pullback before buying. Don't buy directly. I can even short it short-term. Long-term bullish, short-term bearish. This is the logic I use. Okay, now let's look at the previous movement. Why did I say Nvidia is worth everyone heavily positioning? Take the tariff war as an example. Actually, our indicator gave long signals. There were 3 long signals. At this position, after buying, you made money, right? Made 20%. At this position, after buying it, rose 8%. Short-term profit was also okay. Then the last order buy. The position was around $99. Then the stock rose to $200 before we sold. So this order, our profit was 100%. 100% is not bad. Because of the tariff war, the stock pulled back. I said, because I am very bullish on Nvidia's stock trend. If because of some black swan events, like the tariff war or the US-Iran war, causing the stock to pull back, what institutions love to do most is to use this kind of pullback to crazily buy spot stock. Because to them, this is a very good accumulation opportunity. Because AI is the main line, institutions are willing to hold these company stocks, willing to heavily buy. This is the underlying logic. As for finding the buy point, that is what we do later. Our technical methods, our AI model, help us find a better position. So the 2 points must be clearly separated. Okay, by the way, smash likes. Smash likes and I'll continue teaching you how to handle this kind of sudden market when it crashes. Okay? Okay, back to the market itself. At this position, because of the tariff war, the stock price pulled back and crashed, even though as the leader, its decline also exceeded 40%. But based on what I said at the beginning, I said AI is the main investment line for US stocks in the next 3-5 years. Then at this position, when the stock price pulls back, we should think like institutions. When the stock price pulls back, because I am very bullish on it, and now its price is relatively cheap, then what should I do? Right, comment section can answer me. At this moment, what should we do? Shouldn't we buy? If you are an institution, should you buy? You cannot think like a retail investor. Change your mindset for me now. Institutions are very bullish on it, but because of some black swan, the market had panic selling. Shouldn't they buy? After buying, they just hold. Patiently hold. Because it is one of the mainline leading stocks of AI, then its future trend will not be weak. Understand? So the later market also verified this view. This kind of leading AI company, even when the market has panic selling, it is the first to rise. And the rise is the biggest. Understand? So under this background, once you understand the underlying logic, we can then discuss the buy point. Okay, first correct your mindset for me. You must first be bullish on the sector's long-term development potential. Only then dare you, when it pulls back. Use technical methods. Use the indicator to heavily buy and make money. Did you understand? If you understood, type 1. Okay, I'll continue with the buy point. After solving the cognitive level issue, we'll talk about the buy point. Okay? Okay, then I'll continue with the buy point. At this position, look carefully. This is a standard downtrend channel. In the previous live stream, I explained what should we pay attention to in a downtrend channel. See if any friends still remember. In a downtrend channel, there are 2 points we should watch. The upper edge of the downtrend channel forms selling pressure. The lower edge forms support, right? Because we are very bullish on Nvidia. Then we focus on how long until the selling pressure is broken. Once it is broken, it's a big move. At this position, it broke. The price pulled back. It doesn't matter because there will be some fake breakouts. This is very normal. At this position, it broke. Okay? After buying, look at the price again. These two orders, first buy lost 4%. No problem. Because this is the cost of trading. It can't be avoided. Win rate is not important. I explained this before. Then this order after the breakout, the violent rise exceeded 80%. For example, one order, you can make 80%. But when losing, you only lose 3% or 4%, right? Then this risk-reward ratio is extremely exaggerated. Risk-reward ratio over 20. This is a very good trade. This is the kind of order only institutional traders can make. Understand? So this kind of, in the AI sector, I am bullish on when it belongs to the leading segments, leading company and the stock price crashes. It definitely catches my heavy attention. After the stock crashes, according to institutional thinking, we definitely crazily buy. After confirming the crazy buy thinking, then we need to find a very good buy point. A very good buy point is exactly what I taught you earlier. For example, downtrend channel breakout on the small 4-hour time frame. Buy directly. Even if you have 1 or 2 small losses after buying, no problem, as long as you catch one. It's 70%, 80% profit. Many top traders use exactly this method of mine. The core of top traders trading is also small losses, big wins. Their win rate may not be high, but they can turn a few $1,000s into tens of thousands, or even millions. This is exactly why they pursue high risk-reward ratio. They pick the right leading stocks, pick the right positions, buy in and make huge profits. Did you understand? Okay, this is our trading method. Now, let's look at the trading points our AI quantitative model gave us. Around $113. Our AI quantitative model's buy point was around $99. Meaning, our AI quantitative model's buy point was more precise than ours. It bought and rose 13%. Only then did our buy point appear. so you have to trust AI. Okay. Not only do we invest by buying AI-related stocks, when we trade, we also combine AI. I already said earlier. AI can work 24 hours without rest. It can learn every day, review every day, summarize the trading methods of all top traders, top institutions, combine with our own trading methods, optimize and evolve together, and finally achieve very effective results. Better than us, but AI can do it for you day and night non-stop. Understand? At this position, our buy point was around $99. This position also made money. Butterfly pattern bottom appeared. I already said, buy at the bottom and you make money. Look even further back. This position, because every time you buy, according to our indicator, you make money. Not a single order lost. As early as $15, it already told us to buy. The price rose 10%, around 20. Actually, it never gave us a sell signal. If at $15 you bought and could firmly hold the spot, your profit would be over 250%. Short-term returns are already that high. Then you saw the subsequent stock movement. It rose extremely violently. This is still the daily time frame. I'll switch to 4-hour time frame. We are bullish on the AI sector and pick this kind of leading company. How much money can we make following our trading method? Same thing. At this position, the most recent buy point was how much? $166, current price around $200. This order alone made 20%. Further back at this position, we used the AI indicator to give long signal, then gave short signal. This order, in half a month, also made 12% profit. Not bad either. Now, if you can't learn trading, then in my opinion, you can directly use AI to trade for you. That's also okay. But the AI must be reliable. From what we see now, our AI quantitative model is indeed very powerful. Better than what I do. I can only tell you that. Okay, look carefully. I already said, it's not just me saying it casually. Look at how exaggerated Nvidia's rebound is every time it pulls back. At this position, the gain exceeded 100%. While you buy other stocks, you may still be losing money. But buying Nvidia, you already made a killing. This is the return that choosing the AI sector, choosing the leading stock in the AI sector can bring us. You buy other things and you may still be losing. You buy it and do a few swings. Strictly follow the indicator. You would have already made a fortune long ago. Understand? At the same time, I want to remind you, I already told you earlier, the important level Nvidia needs to watch in the near term is $204, $203. At this position, there may be a short-term pullback. For example, attack to $203 and then pull back. Highs start making lower highs. Actually, I explained earlier, higher highs making lower highs is a very bad signal. Let me show you. What is highs making lower highs? Rise. Pullback. Price rebounds. This rebound high cannot break the previous high. Price pulls back again. Rise again. Cannot break the previous two highs. Price eventually crashes. This is highs making lower highs. Lows also making lower lows, forming a weak downtrend. Then if in the next week, Nvidia walks this kind of movement, okay, the stock price may fall again. Did you understand? So pay attention to the current market. If it walks this kind of movement, I suggest you don't buy long. You can even turn around and short. Or I would sell all my long positions and wait for the next low buy opportunity. Then below, if you want to build positions in Nvidia again, you may have to wait. I estimate around half a month. If it can retest around $175, why around $175? Back to the price action I explained earlier, and options orders, and where the institutions' long orders are. Let me show you this position. Isn't it near the lows of the previous few retests? 173, 174, 175, 175. These price levels are between 175, 170. This number range forms the most important support level because institutions will not allow it to break this range. Even if it breaks, they will quickly recover it. They will not allow continuous breakdown with a big bullish candle. They pull it straight back. For example, this position, right? This is classic institutional behavior. Institutions are protecting the price around $175. They don't allow the price to fall further. They are protecting this price level. So when we want to go long, we definitely follow the institutions. Buy where they are willing to buy, right? This is also price action itself. Because at this position, pull back, then rebound. Pull back, then rebound. Every time. The price hits around $170. There will be massive rebounds and long orders. Then later, if the price falls to around $170 again, it is also worth you buying. Understand? And this position is also an options order level. I already said, institutions will do call operations at this position. Okay. And in the next at least 3 months. If the price falls to around $175 again, you must buy. Okay, don't buy at a high anymore. Don't buy at $200. We still don't know if $200 can be broken. Okay, it may pull back again. Now, if around $200 it walks this kind of movement, then it may be worth you chasing. For example, $200 directly breaks to $210. Price does a simple pullback, then breaks again. After simple pullback, breaks again. If it can walk this kind of movement, later we can follow on the right side. I think it's also okay. But don't rush. It hasn't walked out yet. The price hasn't verified our view yet. We follow the price. Don't listen to news. I already said earlier, don't listen to some message telling you it's going to rise to somewhere. It's useless. You only need to see whether the price itself can break the previous high. After a simple pullback continue rising, then we can buy at the low of that pullback. It's not late. There's still time. And it's enough for you to make money. So don't rush. Rushing won't make you money. Did you understand? Brothers, if you understood type 1, I actually shared a lot of dry goods already. Just using Nvidia as an example, I shared a lot. Questions worth you thinking about carefully. Later, I will talk about other leading companies in other segments. Of course, they will all follow the AI line as the main line. You need to remember clearly, in the next 3-5 years, AI is our investment main line. So, how do we choose the leaders inside the AI sector? The leading stocks of the segments. Today, I will explain it clearly to you. Just explain it clearly. Now we are talking about Nvidia. Smash likes, brothers. Push the likes up. Okay, because you need to understand its short-term levels. I also reviewed it for everyone earlier. Because using our indicator, how to bottom fish and top pick, how to buy like institutions when the market crashes, how to stay calm like institutions, right? Institutions never listen to news. Instead, they use news to buy chips, use news to sell chips at the high. I also explained earlier how to judge in a box, whether it is accumulation or distribution. Actually, I can combine Nvidia and explain the operation method of accumulation and distribution again. Let me explain this position. This position is a classic distribution phase. I said the high of the oscillation. Two highs form a resistance zone. The low of the oscillation forms a support zone, right? This is a classic oscillation, up and down, disorderly fluctuation back and forth. When we see this kind of movement, especially when the previous rise was quite big, how to judge whether it is distribution or accumulation? You only need to stare at how long until the upper resistance zone is broken, how long until the lower support zone is broken. Then what is this position? Isn't it a classic breakdown? After breakdown, how much did the stock fall? It fell at least 20% at the lowest. Now, if you learn my trading method, short at $116, the stock finally fell to $92. This short order, short term, you could make 20% profit, right? So the method I teach is definitely effective. It just depends on how you use it. This is a classic distribution, short-term distribution. So our indicator also told you two highs form what? Form short-term top. You don't even need to wait for the breakdown. According to our indicator, this high would have already told you. This is a top position. This is where AI is stronger than humans. Brothers, I have to admire it. Even though this AI was developed by us, it is still stronger than us. Okay, this is the distribution phase. Accumulation I already explained earlier. Accumulation is even simpler. Draw the resistance zone. Draw the support zone, right? One high. Two highs form. That resistance level. One low. two lows form what? Support level. You only need to wait for it to break the upper resistance. Wait for it to break the upper selling pressure. With volume expansion, it must be volume expansion breakout. Then the price will surge violently. Look at this position. I just explained. Our indicator reminded you. When it broke this resistance level, the candlestick turned orange. That represents volume expansion. So I don't even need to look at volume anymore because our AI indicator already told me. Volume expanded at this position. It really did, right? Volume expansion breakout means what? Accumulation. The stock price is about to surge violently. The surge will be no less than 15%. Now, let's look at the subsequent movement. The stock price surged violently. The surge was no less than 15%. It was 50% profit, okay? So if you learn this trading trick of mine, leading stocks in the AI sector, when the leading segment stock is oscillating at high levels, find the breakout or breakdown. Basically, you can catch the big move combined with our AI indicator telling you whether volume expanded at this position, whether the color changed, whether bullish momentum started. You can make a lot of money. And I said, our AI quantitative indicators buy points are even more awesome. Buy points are even sharper. The buy point was at $79 and it already told us to buy while our institutions would buy at $92. So if you believe the AI quantitative indicator, it actually does better than humans. After buying, it rose 20%. Only then did the real move start. Even more precise. Okay, this is using Nvidia as an example. I share a lot of dry goods with everyone. I don't know if you can digest it all. You digest it first? Okay, first think about what I just said. Why? We should heavily position the AI sector's AI leading stocks. I already rank these leading stocks. AI sector is a good sector. How to find a very good buy point is exactly using what I just said, right? Price action, volume bottoming signal, selling pressure levels, right? Institutional orders, butterfly pattern, accumulation or distribution, downtrend. How to trade a downtrend channel. I explained all of this very thoroughly. What to do when you occasionally encounter a fake breakout. At this position of the fake breakout, our AI quantitative indicator told you. Bears did not follow. Blue bottoming signal appeared. A big bullish candle recovered it. Buy directly. This is a fake breakdown. Our indicator can automatically identify it too, right? I told you all these things. Digest it first. Next, I will tell you, besides Nvidia and these companies everyone already knows, what other companies have been overlooked by us and should be heavily focused on. Brothers, besides Nvidia, this kind of AI leading company that most people already know, what other companies are worth our heavy focus? Actually, most people have overlooked this company. In fact, it is a key player inside the AI sector and one of the leading companies. But many people never expected its stock would rise. It belongs to the underestimated hidden AI leader and is also a super leader in the second phase of AI. Nvidia belongs to the first phase super leader, right? Then Broadcom is the super leader in the second phase. Let me give you a quick introduction to Broadcom. It mainly does chip design plus network connectivity. Its core business is ASIC custom AI chips, as well as data center switching chips and network equipment chips. Just from the name, you can tell it is a strongly AI-related company. That is, a leading company inside the leading AI sector. Understand? In the future, a huge number of companies will definitely bypass Nvidia's GPU and make their own ASIC chips. So Broadcom will directly benefit. Understand? This is also what I want to focus on teaching everyone today. Moreover, compared with Nvidia, its stock price is cheaper and more undervalued. Now, let's first look at Broadcom. I'll turn off all my indicators first. After turning off the indicators, at this level, I want to ask all the friends in the live stream, looking at this kind of stock movement, would you buy or sell? For example, at this position, the stock rose to $408 with quite good earlier gains, right? It is in a long-term uptrend channel, and the uptrend line is very clear. When the stock price rises to around $410, do you buy or sell? Can any brothers tell me? Actually, most people seeing this kind of movement would buy. I can understand that because the trend is upward. And the trend looks very healthy. But most people ignore one issue. Institutions do not pump straight up at 90 degrees. Pull back then rise, straight to the moon. That is what ordinary people think institutions do. But the real way institutions pump is like this. Wave-like advance, spiral upward. Even when it makes a new high, there will be a pullback. Okay? So this is healthy institutional pumping. Okay, now back to the current stock movement. Based on my bullish view on Broadcom, it is a core leading company in the second phase of the AI sector. Okay, I am very bullish on it. I'll state my view first. Because at the beginning of the live stream, I already told you, in the next 3-5 years, I will heavily position AI-related companies. So I picked Broadcom stock. Now, what I am solving is the buy point and sell point problem. Right? Seeing this kind of stock movement at $408, many friends probably think, I'm bullish on it. The stock keeps making new highs. I will heavily buy and chase. But I already told you, institutions will not directly pump it straight to the moon. That kind of movement is very rare. Institutions most likely do this. Spiral upward. Let me demonstrate again. Only at the end will it surge, right? So after a long period of washing out or consolidation, will it produce an extremely high gain? It cannot just surge straight up. That kind of movement is rare. Okay, so corresponding to your current movement, rise, pullback, rise, pullback, rise, pullback, rise. What next? Buy or sell? Actually, at this moment, you need to watch its volume and its price behavior. At this position, I will be very cautious. I will not buy directly. I'll state my view first. I will not buy directly unless it breaks $415 with a big bullish candle and makes a new high. Only then will I buy. Otherwise, I won't buy. Look at the latest stock movement. It crashed directly. Okay, now look again, where our AI quantitative indicator gave the short signal. Around $400, right? At this position, our AI quantitative indicator reminded us the stock price might pull back. So basically, it was already at the top, around $400. It rose to around $406 and basically topped. So I said, don't think that after the stock gives you a buy at this position, the big players will pump it 90 degrees straight up. Impossible. The most probable movement for big players is to walk exactly this kind of movement. So in between, there will be oscillation and washing out. Did you understand? Why did you buy long at the high and couldn't short? At this position, why did you lose money? There are too many reasons. For example, you listen to news or listen to all kinds of messy analysis and bought long at the high, then lost money. But why did we sell at the high? The reason is very simple. Price itself will not be pumped straight up by institutions. Most likely, it moves upward with oscillation until the washout ends and then surges, right? It will go through a long washout period. That is institutional behavior. At the same time, what we monitored, for example, at this position, important selling pressure near the previous high, closed bearish with volume that did not expand to follow. New high, but volume did not follow. Here again, new high, but volume did not follow. Look at the volume at this position. Very small volume, right? It stayed at a very low level. It made a new high, but there was almost no bullish follow through, right? So the price pulled back. That's why I asked everyone earlier, seeing this kind of price movement, how should you operate, right? Many people chase the high, buy, and lose money. But we understand institutional behavior. We understand the trading method professional traders should use. We will stand aside and watch. Volume, pattern, candlestick pattern, whether it shows the inverted hammer with a wick or a big bearish candle, or the stock makes a new high, then falls back directly, a pullback, right? Volume does not follow. All dangerous signals. Once you understand these, you won't lose money. Okay, now the price fell to this position, down to $328. Do you buy or sell, right? I'm asking everyone again. Comment section, tell me, at this price, do you buy or sell? According to the method I taught you, I think at this position, you should already know how to operate. I just explained so much, right? First, I am very bullish on this company and will long the stock long term. When the stock price pulls back, what should I do? What should institutions do? Brothers, think for more than 10 seconds. I already explained it very clearly earlier. I don't want you to listen for nothing. I hope you actually learn something. Think about it and answer me. Comment section, you can answer. Okay? At this position, the stock price pulled back from the high. After we sold at the high, the stock fell to $330. Let me explain it from the beginning again. Isn't this position the low of the pullback? Low of the pullback. Here is also the low of the pullback. 3 lows, all saw violent surges. This low surged 18%. This low surged more than 20%. Every time it retested around $330. The stock price surged violently. That can only tell you one thing. Institutions have placed a large number of call options around $330 and will protect the price around $330. They will not allow a big decline at this position. That's why institutions pump at $330. So once we understand it, when it falls to $330 again, even if it prints a bearish candle, I should already have my buy plan ready. I only need my indicator to give me the signal, or a vertical line to appear, or a bullish candle to confirm that this price is valid. Buy directly, no hesitation. Look, isn't this position exactly the vertical line pattern I mentioned about to appear? Very long lower shadow, very small body, like a hammer, solidly hammering the bottom. What signal is this? Answer again. I already explained it earlier. Isn't this position a short-term bottoming signal? Combining what I said about Nvidia and TSMC earlier. Didn't I explain what a vertical line means? Especially at an important support level, where institutions are willing to buy at that price, when an important support level prints a vertical line. I think you should know what to do, okay? Shouldn't you buy? Look further back. After buying, the price started rising. Up to now, the highest gain is 9%. If you follow my trading method, you have already made 9%. Even if the price pulls back later, it has not fallen back to your cost. Look even further back. Okay, until this position, the price fell again. Even after falling, the highest profit still exceeded 8%. 8% profit for short-term trading. I think that's already enough. Enough for you to make money. Later, when the price retested this position, we needed to be careful. What appeared again? The vertical line appeared again. I said earlier, this kind of high-level support may have a fake breakdown. Didn't I remind you? At this position, the vertical line appeared. Don't panic yet. The vertical line may be hammering the bottom solid. The price also rebounded. The rebound was 6%. Actually, for short-term trading, 6% profit is already enough. Enough for you to make money. But later, I already did 3 orders. 1 order, 2 orders, at this position, 3 orders. All made money. The last order may fail and may give back a bit, but that is normal. There is no trading method that makes money forever. I'm not telling you, I make money forever. That's impossible, right? I'm just demonstrating how we should operate facing this kind of market. We only need to make money most of the time, make more when we win, lose less when we lose. That's already enough. Okay, after this position broke lower, the support level here became invalid. Then we look for a new support level. First, determine the low. New low. 1 low. The low of the pullback. Okay, form a support level and draw it. You can understand it as a range. The corresponding price is roughly between $304 and $300. I'll take the lowest point. Then look for what? A resistance level. Okay, back to what I explained earlier. After a violent surge, high-level box consolidation forms. What do we need to watch? I already explained it with TSMC and Nvidia earlier. At this moment, you should pay attention. Watch how long until the lower support is broken and how long until the upper resistance is broken. Once there is a volume expansion breakout, open my indicator. Once there is a volume expansion breakout, what do you do? At this position, it broke. Shouldn't you buy? After buying, the stock price rose directly. The gain exceeded 13%, close to 14%. So this order, you could make money. But actually, if you strictly follow our indicator, when it retested the support of the box, at this position, retested the support, very long lower shadow. Although it didn't print a full vertical line, the long lower shadow is still a bottoming signal. It's just that the bottoming power is not particularly strong. but our indicator also gave a buy point around $300. If you follow our indicator to buy, Broadcom's current stock price profit exceeds 30%. You need to know that recently 80% of stocks are not making money. But according to my method, you pick the AI sector, heavily position the AI sector, pick the leading segments and leading companies inside the AI sector, and when the stock pulled back, you found a good buy point to buy. Then you can make excess returns. Especially during the current US-Iran war period, when US stocks crashed hard, but you bought Broadcom and similar companies and still made money. So my logic is absolutely correct. Feel it again. Okay, feel it again. Okay? Broadcom has been explained clearly to you. Now, look at Broadcom's gain in the past few months. How much did it exceed? It exceeded 150%. I said AI is absolutely a sector worth your heavy positioning and continuous buying. When the price crashes violently, you must focus on operating this position. It was also because of the tariff war and some black swan events that caused the stock to collapse, right? After the stock collapsed, our indicator gave a bottom fishing signal and buy signal. At this position, the candlestick turned blue. I explained earlier, when the candlestick turns blue, it is a bottoming signal. Bearish momentum is insufficient, right? Bottoming signal combined with what? Again, a classic vertical line. What does a vertical line represent? Answer me. What does a vertical line represent? Isn't it like a hammer? Doing what? First answer me. Vertical line hammers the bottom solid. Plus what? Blue candlestick. Our indicator automatically reminded us downside momentum is insufficient. Bottoming signal appeared. Plus vertical line building the bottom. Long signal appeared. At this moment, there is only one button. Buy. After buying, look how much the price rose. Rose more than 80%. Highest gain exceeded 100%. And in the middle, at this position, what did our candlestick color turn into? Didn't it turn orange-yellow? Why did it turn orange-yellow? Didn't I explain earlier? Orange-yellow means bullish momentum is quite strong. The price will continue to rise further, right? The price will attack higher. So at this position, we will firmly hold and not sell. Understand? So once you have the indicator or understand my trading analysis method or use my method, pick the right sector, pick the right stock, you will make a lot of money. You will make a lot of money. The premise is that you understand what I am saying. Can you understand? Okay, brothers, think about it. All the methods I taught today, can you understand them? I'll give everyone more than 10 seconds to think. Okay, otherwise I keep talking here. Think about it. Think carefully, okay? Have you figured it out? Brothers, have you figured out everything I taught today? Now let's continue with real operation. For example, at this Broadcom position, we switch to the 4-hour time frame to operate. It may feel smoother for trading and more in line with everyone's style. For example, on the 4-hour time frame, using the method I just explained to trade Broadcom stock. Recently, when I posted videos and during live streams, I reminded you how to operate Broadcom. I already said it. At that time, our buy point was around $300. The indicator also gave around $300 and gave a long signal. Why long at this position? First, I am quite bullish on Broadcom. It belongs to the leading segment. We acknowledge this first, right? The price pulled back because of the US-Iran war. Then look at the previous low. The previous low corresponding price is around $297. Last time it fell to around $297. And the price rebounded quickly by more than 16%. So this position is a key price level, right? Institutions will organize protection again by call options and long orders. I already explained this earlier, right? Look even further back. At this position, the butterfly pattern appeared. Two bottoms hammered solid. Then it surged directly more than 30%. That price. Corresponding price is also around $297. Okay, connect these two levels with a line, and it forms what for the later trend. For example, around $297. This position butterfly pattern forms important support for the later trend. At this position, the bottom of the butterfly pattern directly gave a long signal. This position is also a long signal. Direct surge of 18%. Look further back. Half a month ago, the price fell again to what? Around $297. What should we do? Shouldn't we buy? From the price itself, falling to important support means we should buy. This is condition 1. Second condition. Look at our AI quantitative model, that is volume. At this position, isn't it blue? What does a blue candlestick represent? Comment section, answer me. What signal does a blue candlestick represent? A blue candlestick means downside momentum is insufficient. You only need to open our AI quantitative model. Downside momentum is insufficient. At this position, the decline is not like before, with very large explosive volume. At the beginning of the year, volume was very large, causing this wave of decline to be very violent. At this position, volume was also large, but when it reached this position and fell to $297, volume shrank. Look, isn't the volume at this position stepping down, right? That causes bearish momentum to be insufficient. A blue candlestick appears, meaning the market may bottom. Okay, this is also condition 2 for going long. Now, attentive friends may have already noticed. The third condition is appearing. What is at this position? I already explained it very clearly. What does this candlestick represent? Do I need to repeat it for you? If after listening this long, you still don't know what this candlestick means, then I really suggest you study hard. What does this candlestick represent? Comment section, answer me. Okay, brothers, smash more likes. More likes, more likes. I will share more dry goods. Isn't this candlestick a vertical line? Doesn't a vertical line represent a bottoming signal? When a bottoming signal appears, what should you do? Shouldn't you go long? So, 3 signals tell you, at this position, you should go long. At the same time, our AI quantitative indicator also gave a long signal. So buying at this position made money, right? Surged 20%. But can you do it? I won't tell you. Can you do it? First, ask yourself, can you do it? Can you analyze like me that this is a buy point? I already talked about 3 stocks. For this stock, I didn't specially pull out the candlestick for you and specially look for this kind of market to explain. No, I just casually talked about it. This is the market that just happened recently. I'm only pulling it out to review for you. This is also the point I reminded you to buy in previous videos and the point we actually traded together. Now I'm just telling you why I bought at this position and added a lot of position so you can learn it. Understand? Let me tell you, most retail investors will not buy Broadcom at $300. They will only buy around $400. After listening to news telling them the price has already risen, the trend has started. If you don't buy now, it will be too late. They will buy at $400. All kinds of positive news come in. Heavily buy, the ending for them is a pullback, position blown up, bankruptcy. This is the current situation most investors face. You can't escape it. You can't hide from it. But once you learn my trading method, this situation will not happen to you. Our buy point was buying at $300. We are still holding now. Why are we still holding? Why did we buy at $300? I already gave the reasons. 3 reasons. Volume shrank, bottoming signal, vertical line hammered the bottom at important support level, right? Butterfly pattern bottom, formed a bottoming signal. Price rose, hammer again at the same level. Price rose, right? These few reasons are already enough for you to buy. Enough for you to make money. And these analysis methods are all used by institutions. Only when institutions pump can we make money. So we must figure out institutional trading methods. Now, why haven't we sold yet? I said at this position, bullish momentum is very strong. At least for now, our candlestick tells us what the orange candlestick represents. Doesn't it mean bullish momentum is quite strong, right? I already explained it earlier, right? You only need to strictly follow the indicator and hold, and you can make money. Okay, this is randomly selected market. Randomly selected market. As long as it meets my second condition and meets my indicator, long signal, I buy and mindlessly operate and make money. Okay, that's Broadcom. Next, I will still share 1 to 2 more companies to help everyone make money. So brothers, smash more likes. Don't leave my live stream. Okay, next we will talk about other stocks. Broadcom was just the second phase leading company I am bullish on. I can talk about some third phase leading companies to lay out for everyone. For example, Google. For example, the storage sector leader Seagate Technology. Okay, smash likes. We continue. Pullback. Brothers, yesterday there was a massive bombshell piece of news. TSMC. Its Q1 2026 profit surged 58%. Extremely exaggerated. Far exceeded market expectations and set a new record high, mainly because of the enormous global demand for AI processors. TSMC announced its Q1 net profit jumped 58%. The company's Q1 net profit reached $18.2 billion, way above everyone's expectations. Actually, we weren't surprised at all. We have always been very bullish on AI-related companies, especially companies like TSMC and Nvidia, and we have been following them long-term. In the last few live streams, I kept reminding everyone. I said when TSMC fell to around $315, that was an excellent buying opportunity. At the time, I was live streaming and posting videos, reminding all of you to buy TSMC. Look at the stock price now. It has already risen as much as 20%. Yesterday, after the news came out, the price pulled back, but it's still up 15%. For example, if you were in my live stream before, or if you listened to me talking about TSMC and bought according to the signal I gave you, you are already making money on TSMC right now. But a lot of friends are saying, wasn't the earnings way better than expected? Doesn't the company make money? Why did the stock price still fall? This is exactly what I want to explain to you today. Why? So often, when major positive news comes out, the price actually falls instead. And why before the news is released? The price has already risen in advance. Actually, this is the key point I want to share with you today. This is the favorite trading method of professional institutional traders. Listen carefully. Take TSMC as an example. At this position, look, yesterday the positive news came out, but the price fell instead, down 5%. Yet a few days before the news, the price had already risen 20%. What we need to do is, before the positive news is released, buy at a very cheap price. Then wait for the price to rise and take our profit. Instead of waiting until the positive news comes out, then chasing the rally, only for the price to drop immediately, and we lose money. We have to do the opposite. This is the second key point I'm sharing today. I want to talk about the US stock trading direction that our entire team and all the traders in our company unanimously like. I can give you a quick preview first. It's the AI sector. The AI sector can be divided into upstream, midstream, and downstream. I will pick out some very representative stocks and give you analysis and layout plans. You have to believe that the biggest investment opportunity in US stocks for the next 5 years, the strongest main trend is AI. Okay, AI of course also has midstream and downstream. We just mentioned, for example, upstream, Nvidia, TSMC, Google. Then there's the storage sector, STX Seagate, and Broadcom in semiconductor manufacturing. These are all companies we need to focus on. As long as you follow my rhythm, you will definitely make money in the next 2 years. Okay, back to the first topic. Yesterday, TSMC released its Q1 2026 earnings. Year-over-year growth of 58%, but the price dropped immediately. Have you ever wondered why? You never thought about why every time positive news comes out, you buy and the price falls instead. But before the news was released, the price had already started to run. You didn't dare to buy. Actually, this is how smart money plays. There are always people who know TSMC's earnings before you do. By the time you hear the news is already useless. The truly useful information, they will never let you know. Understand? The truly money-making information is always in the hands of smart money, always in the hands of institutions. Institutions have all kinds of channels, all kinds of tools, and they can even get inside information. They knew about TSMC's earnings report earlier than you, or they had already predicted that when TSMC released earnings, the numbers would explode higher. You can't do that because you don't have the tools. You don't have AI models. You don't have insiders. You don't have professional financial analysis. You lack real trading experience. You don't have that awareness or cognition. You only wait for mainstream media to release some positive news. Then you go buy, so you are always slower than others. That means you are destined to lose money. Understand? Professional institutions only look at one thing, and they can still make the TSMC money. They only look at price action. What is price action? For example, at this position. A few days earlier, TSMC, our AI quantitative indicator, at least 15 days before, because of the US-Iran conflict, the stock fell 20%, down to around $315. Look carefully around $315. Our AI quantitative indicator gave a blue candlestick. Why is this candlestick blue? If you have followed my videos for a long time, you should understand. A blue candlestick in a downtrend means bearish momentum is insufficient. The bears have already shrunk in volume, meaning volume did not continue to follow. The selling pressure weakened. Fewer people were selling. That's when the blue candlestick appears. Did you get it? Now let's look at the previous declines. You can see the volume was very high, right? At this position, volume was very high. But when the price fell to around $315, did the corresponding volume start to decrease? And several times, the volume was very low, except for a few spikes. But compared to the previous volume, it had decreased a lot. Previously, the volume was very high, but at this position, the volume clearly dropped. It only means one thing. Fewer people were selling. Understand? That's why a blue candlestick appeared at this position. This is a bottoming signal. After this bottoming signal appeared, what kind of candle did it print the next day? It printed this bullish candle. And I said before, this is a standard vertical line. What does a vertical line mean? It hammers the bottom solid. It's like a hammer solidly nailing the bottom at an important price level, making the bottom firm, causing the price to stop falling and start rising. Okay, when this bottoming signal candle appears, plus a vertical line, what signal did our indicator give? A long signal. At the same time, a perfect butterfly pattern formed. In yesterday's live stream, I said, at this position, the two bottoms of the butterfly pattern form the base for the price to rise. At this position, it most likely bottomed and went straight up. Okay, according to our indicator at this position, after the bottoming signal and long signal appeared, and the two bottoms of the butterfly pattern formed, the price had a high probability of rising, so we just buy directly. We don't need to wait for the earnings report. We don't need to wait for any news, because we can't get that kind of information firsthand. That information is held by a small group of people. But through our AI model, we can monitor TSMC and see that its price itself had fallen to a point where volume could no longer expand on the downside, or we monitored that at this position, a candlestick appeared, a vertical line, with a very long lower shadow and small body, hammering the bottom solid. For example, we monitored the two bottoms of the butterfly pattern. Double bottom formed, further solidifying the bottom. The price had a high probability of rising, so we only need to wait for the price at this position to give a buy signal. Then we buy. I don't need to wait for news. I'll say it again. If you trade on news, you won't make money. Understand? This is also why so many people buy after the news comes out, but still lose money, because the truly useful information will never be given to you. By the time you know it, the institutions have probably already finished pumping. Think about it yourself. Don't you often encounter this situation? Alright, if you often encounter this situation, then I suggest you listen carefully to today's live stream. Hit the like button, okay? Brothers, smash the like button. I still have more dry goods to share. At the same time, we can also notice during the previous decline of TSMC, from the high, because of the US-Iran war, it fell 20%. This decline lasted 1 month. So, in the short term, whether in terms of space or time, 20% drop, 32 days of decline. Both time and space have left room for the future upside. Understand? It compressed the price, like a spring. Originally, the spring was this high. Because of some irresistible factors, It was pressed down this low. It accumulated energy. Once the irresistible factors eased, for example, the US-Iran war, now ceasefire negotiations are heating up. Then market risk appetite returns. The originally compressed spring will instantly rebound. It will return to the previous high. The original height, after being compressed, when the external pressure is suddenly released, it will rebound directly. The current TSMC is exactly the example I'm talking about. Because of the US-Iran war, the stock price was compressed. Compressed to this low because the ceasefire negotiations are now underway. The stock price instantly rebounded back to the previous high. This is also a common operation method we use. Did you get it? So you have to believe in these quality companies. When black swan events cause the stock price to be compressed, you need to pay attention. A trading opportunity has arrived, especially in the half month before earnings are released. You need to focus on it. Because capital will front run. I said, capital will not stupidly wait until the earnings are released to buy. That would be too late. Smart money definitely positions in advance. Understand? Okay, at the same time, we can also buy based on price action itself. It's basically impossible to buy at the absolute bottom at $380. Only ordinary investors, only retail leaks, would buy TSMC around $380. Okay, earlier when I posted videos and went live, I already said our buy point was around $325. Buy around $325. You are now up 17%. Okay, do you want to hear the next price action analysis? If you want to hear it, smash the like button. Hit follow. I still have heavy stuff coming for you. The US stock sectors I'm bullish on, that you can invest in for 5 or 10 years and beyond. Alright, let's look at what price action itself means. Last time, TSMC rebounded. At this position, it first rebounded 23%, then the price pulled back. How much did it pull back? It pulled back 10%. The low of the pullback was at what price? This position's corresponding price was $319. Look carefully. Why is this the low of the pullback? After rising and making a new high, the price pulled back. After the pullback, it started to consolidate. The bottom of the consolidation, the corresponding price is around $319. Around $319. We draw a horizontal line. Draw the horizontal line. Okay, it becomes very clear. This horizontal ray extended to the right. This price range, the bottom of the consolidation. Why is it the bottom of the consolidation? Because after the breakout, the price had a violent surge, rising 20% from the bottom. So this low is the important support for the pullback. The price successfully rose another 20%. This is what I'm showing you, price action. In the middle section, our candlesticks are marked orange-yellow. What does orange-yellow represent? Orange-yellow represents very strong bullish momentum. The price rose all the way. Okay, this position is the bottom. Once the ray is drawn, then this bottom also forms important support for the later trend. Understand? Because human nature doesn't change. In the previous wave, people who bought the low at this position and made money, their price anchor is around $319. They believe around $319 will form a rebound, including some institutions that will not allow the price to break $319 quickly. They will buy call options at $319. Buy long positions. This is called price action because human nature doesn't change and institutions will not allow TSMC to have a big decline because it would affect their long-term positions. Because TSMC itself is a first-tier AI company, a leading company in wafer manufacturing and chip foundry. Many institutions, including BlackRock and Blackstone, are all grouping up to buy TSMC stock. So, these institutions will not allow it to break certain levels. Important key levels are found using exactly this method of mine. Levels where there is strong consensus among bulls. For example, this $319. After all, it was the previous violent surge level. A large number of people went long here. So when the price falls back to around $319 again, Okay, this position actually broke $319 once. But it doesn't matter. Our candlestick color turned blue, accurately identifying this as panic selling. What is panic selling? It's scaring you, making you afraid to buy at $319. So it dipped quickly and then recovered immediately. At this position, we go long. Because institutions will not allow it to break $319. Institutions will not allow it to break around $320. Okay, so even if this position broke briefly, the instant recovery means this was a fake breakout. A fake breakdown meant to scare you, so you wouldn't dare to buy. Did you understand? So you wouldn't dare to buy. That's why it formed this kind of movement. But based on the multiple analyses I just made, then when it fell to this position, it became our long position. Understand? I don't need to listen to anyone's news. No need. I only need our AI model, the options order data we monitor, our price analysis, volume analysis. Right, the butterfly pattern, and key candlestick support levels. Do I still need to listen to news? Why do ordinary people fail at trading? This is exactly the reason. You have no analytical method. You can't trade like professional institutions, professional traders. You only know how to follow news, insider tips, high leverage, all in, frequent trading, and in the end you lose money. Did you understand? Brothers, say it. Why in our previous videos? Did we dare to let everyone buy TSMC around $320? Even around $318? That was based on our logical judgment, based on our trading experience, and based on the signals our AI quantitative model gave us. This is a standard butterfly pattern. We can also look at TSMC's previous moves. As long as this butterfly pattern appears, if you have our indicator, as long as this butterfly pattern appears, basically when the double bottom forms, two bottoms appear, it rises. You don't need to listen to news. When the real news appears, it's basically already at the high. Understand? When this double bottom appears, did it give a long signal? Buy on the long signal. You basically make money. What news are you still waiting for? No need to wait for news. People who wait for news are the leaks. People who wait for news are the ones who lose money. That position is a classic example of waiting for news. For example, yesterday you saw all kinds of financial news, financial earnings reports, major positive news. The stock price is going to surge crazily. So you heavily bought at $380, even added leverage. Then the stock price instantly fell. You start doubting life. Why are these institutions, this Wall Street, staring at my few $1,000 account? Why do they always harvest me? It's not that others are harvesting you. It's that you didn't understand. You didn't understand how this market really works. That's why you lose money. When you understand the underlying logic of the market, you know how the big players play. You know how smart money plays. You know how institutions play. You won't say things like that anymore. People who say that are all leaks. Understand? Okay, let's continue sharing. At this position, I'm sure yesterday a lot of ordinary people chased at $380 and bought TSMC. What you need to pay attention to now is whether TSMC can hold the short-term support at $360. If it can't hold $360, then you will face a significant correction. This position around $360. This is also a Fibonacci support, short-term 0.618 support. This support level is quite important. If today, when the US market opens, it causes the stock to fall and it breaks below $360, then you need to be careful with TSMC. It's possible. It could swing up and down and fall to $345. That's possible. Be mentally prepared. You shouldn't have chased the high. The ideal script is today TSMC falls to around $360, then reverses and attacks. Simple pullback, then rises again. This is the standard. Pullback then, new high movement. It will most likely walk this path. So you can feel a bit safer. But if tonight, the key level around $360 only has a simple rebound, and the price instantly prints a big bearish candle breaking below $360, then you need to be mentally prepared for it to fall to this position. around $345. Meaning in the short term, the downside space is at least around 4%. It depends on whether you can hold. But our entry was at $315. And at this position, look, we already have a sell signal. So according to the indicator, we bought at $315 and sold at $380. 20% profit. We already took it. So the current market has nothing to do with us. We only need to wait for the indicator to give us a new signal. That's it, okay? But if you got stuck at the high, now I'll tell you how to watch for opportunities. For example, you wait for it to break $360. Then open a put option. To hedge your spot position, that's also fine. If it doesn't break $360, the price rebounds. Rebounds to near your cost. For example, rebounds to around $380. You can sell to break even and exit. That's my advice for TSMC right now. How the current market will move. Anyway, the highest buy-ins are most likely ordinary investors or people without a trading method. And since you made a mistake now, you need to know where the downside risk points are if it drops further and where the high of a smooth rebound would be. Okay, you need to have these things clear in your mind. So today I gave everyone some coping plans. Okay, if we go back to TSMC, the long-term trend of this company, actually, I am still very bullish on this company's trend. You can see its long-term trend is basically rising along the Bollinger Band channel. See it? Its long-term trend is upward. So the method we often use is to look at the big time frame. Trade the small time frame. Big time frame is upward. Then we definitely focus on longs. With shorts as secondary. Why focus on longs? Because we follow the big time frame. Understand? When the big time frame is upward, even if I get the small time frame wrong, it will pull me back. Understand? The big time frame will pull the small time frame back. Even if the small time frame is wrong, you float in loss for a while. But ultimately, because you follow the big time frame, you can still make money and exit. Did you understand? This is trading big to do small. Big time frame determines the trend. Small time frame follows the trend, even if you accidentally get it wrong. Because of the upward trend on the big time frame, it will bring you back and you can still make money. Did you get it? Okay, that's TSMC. We can also review TSMC's previous moves using our trading method to see if we can make money in the financial world. This position is a classic example of the butterfly pattern appearing. After the butterfly pattern appears, the price rebounds. A lot of people buy at the high. The mentality of buying at the high is completely understandable because you're afraid of missing the move. At the low, you panic. It fell to, for example, this position, fell to around $274. You think TSMC is finished. You don't dare to buy. Right. All kinds of negative news come out. You hear some expert tell you, at this position, TSMC's earnings are going to explode lower. Financial condition is bad. AI is a bubble. Hearing these kinds of news, you don't dare to buy again. But later, the price forms a butterfly pattern. Two lows form the bottom. The price rises all the way. Rises all the way. Both of these long trades, you could have made at least 15%. Around 15%. Good. Then, you see the price rise to around $310. You hear some expert tell you again. Or some news tells you, TSMC's business is actually very good. The previous stuff was all rumors. We should buy TSMC. Embrace AI. Okay, so you buy again at $310. After buying, the price instantly crashes. This is the mistake you often make. We don't follow the news. I'll say it again. This is also the key point I want to share with you today. Why so many people follow news? They feel this news is positive. The news will push the stock to keep making new highs. But often when this news appears, the stock price instantly crashes. That's because capital will never wait until the news is released to buy real professional institutions, real big players, real consortium capital. They position 1 month or even several months in advance. When everyone is afraid to buy, they buy. When you are panicking and scared, they buy. When you are excited, when you want to buy crazily, that is often the top. Understand? So why do we do the opposite of most people? This is exactly why. Did you understand? So, including this position, it is also a classic example of price falling. Most people don't dare to buy. Our indicator gives a buy signal. The price rises all the way, rises to near the previous high, facing important selling pressure. Look at this position. What did the price do? A wick. Let me tell you, the wick candle at this position is also a very dangerous signal. Delete this line. Look at this position. Very long upper shadow, small body. A wick appears. At the same time, with volume expansion, then at the high, it made a new high. Look at this position corresponding to the high. After making a new high, very long upper shadow, very small body. This is a classic inverted vertical line. Where there is a vertical line, there is an inverted vertical. The vertical line hammers the bottom. The inverted vertical line is telling you the situation is not good. I originally made a new high, but I couldn't hold it. For example, I originally had very strong bullish momentum. Buyers were very strong, but the price was pushed down once. It means the selling pressure above is very heavy. Understand? Heavy selling pressure above. The price cannot hold a new high. Then this is an extremely dangerous signal. In the future, when you see this kind of candlestick, especially near new highs, pay attention. This position may be about to crash. Understand? So look, immediately the next candlestick, our indicator gave us a sell signal. The price crashed 10%. These things are all our trading experience. We have also quantified them with AI. Quantified them. Ordinary people, if you want to learn it, without 2 or 3 years, you won't even get in the door. Okay, even if I explain it to you, don't think these things look simple. When it's your turn to do it, you can't do it well. Ask yourself, can you judge it? Can you see that this position is the top? Let me see how many people can see it. Okay, this is a little trick I want to share with everyone today. At the same time, at this position, look, after the butterfly pattern appears, the price rises. When the real news comes out, the price falls instead. Remember the same sentence. Truly money-making news can never be known to you through mainstream media. What they let you know are the messages they want you to know. So don't believe in insider trading. You've already lost until your head is bleeding. Understand? Now let's go further back. We only look at the candlesticks and we can still catch the rise between the steps. Okay, this position is another classic example of high-level consolidation pullback, where most people don't dare to buy. Why is it called high-level consolidation? At this position, the price rose more than 70% from the bottom. More than 70%. The stock price just can't make a new high. A lot of people get scared. Originally, the stock price kept making new highs. Look at this position. New high. New high. But when it reached this position, the stock price showed horizontal movement. This is the box consolidation movement I shared with you in previous live streams. Box consolidation movement is high-level consolidation. At this position, you can understand it as the big players' chip distribution area, or you can understand it as an accumulation area. It mainly depends on how you judge it. Let me explain to you. At this kind of high level, when the stock price goes into consolidation, how do we handle it? How to buy before the news? How to position before 99% of people? And finally, make money. Okay, listen carefully. At this position, from $163, it rose to around $250. The lowest point it fell to was $145. The highest gain exceeded 70%. After a 70% gain, the stock price started high-level consolidation. The typical characteristic of high-level consolidation is the stock price cannot make a new high. Its highs basically show horizontal movement. The lows also show horizontal movement. Okay, the plan we take is very simple. How to buy ahead of 90% of people. You only need to pay attention to the upper side of the box. And the lower side of the box, one is the main force zone. One is the support zone. Once the main force zone is broken with volume, or the lower support zone is broken with volume, a big move is about to start. Remember, after a violent surge, it maintains high-level consolidation. How to judge whether it is accumulation or distribution? You only need to pay attention to the main force above. the support below, combined with volume. Understand? So how do we judge? This position is a classic example of, I'll say it first, a classic accumulation phase. What is accumulation? The big players use consolidation to buy enough chips to prepare for the later violent surge. That is accumulation. My judgment standard is, when the price breaks the upper resistance with volume, once it breaks with volume, we treat this high-level consolidation as accumulation. The price is about to surge violently. The surge will be no less than the width of the box, at least 10% upside, or even higher. Okay, at this position, the price, did it break the main force level above the box? After breaking the main force level, why is the color of this candlestick different? Actually, I mentioned it earlier. The orange-yellow candlestick is our AI quantitative indicator, automatically reminding me, this position is a volume breakout. Okay, let's look at volume again. At this position, the volume corresponding to this candlestick. Is this volume much higher than the previous volume? Isn't this a classic volume breakout? Can you see it clearly? Volume breakout above the upper edge of the box. I said, this position is an accumulation zone. What should you do at this moment? Brothers, tell me what you should do at this moment. I explained it very clearly. Let me see if you understood. What should you do at this moment? Shouldn't you buy? At this moment, there is only one button. Buy. Buy your long position. Now let's look at the subsequent price performance. It rose all the way. What was the highest gain? It reached more than 25%. 25%. After you bought this order, the price rose 25%. In just over a month, you made 25% profit. But if you use 10x leverage, then the profit would exceed 200%. But that's the result of leverage. Just talking about spot, making 25% in a month. You are already better than most people, because most people are still losing money at this time. Understand? Okay, actually, my buy point at this position was, when it broke out, the corresponding price was around $248. But our AI indicator actually did better than me. Why did it do better? At this position, when it retested the bottom of the box, a lot of friends were shorting. The price reported lower, but our AI quantitative indicator gave us a long signal. Its buy point was better than mine. It bought and rose 8%. Only then did I buy. But its position was at $230, even more precise. So sometimes AI does better than humans. Even though this AI model was developed by us, I led a team of 30 Wall Street traders to develop it together. It took several years to develop the AI quantitative model. Even though we made it, we still can't beat it. We can't win against the AI because AI has no emotions, no feelings. It doesn't get scared. It strictly executes, monitors the market 24 hours, optimizes our strategy, and eventually evolves into a very powerful trading method. Trading model. Understand? It will do better than us. This is a classic example in the beginner zone. The classic template is exactly this. Break the box bottom, consolidate, and buy. This is a trading method. Now, if you really can't learn it, you can't judge whether volume is expanding. You don't dare to chase at the high. You don't dare to hold the position. For example, you can't buy at $248 and sell at $300. You can't hold the position. Okay, then just follow our AI model to buy. Don't try to learn it yourself. You won't be able to learn it. If you could learn it, you would have learned it long ago. Okay, I said at this position. You take $300 from this position, from the low to $300. Ordinary people can't do that. But what you can do through the AI model is buy at $228. Wait for the sell signal, around $300. How much profit can you make on this order? 35% profit. 35% in 1 month. Extremely exaggerated. To be honest, this return is already very exaggerated. But a lot of people wait for news. For example, at the bottom, when the box bottom is consolidating, you don't dare to buy because you don't know how the market will move. When the stock price pulls back, there will be a lot of negative news instead. You believe the news, think it will crash. But when the price really rises, you regret it. You buy again. After buying, the price consolidates again. You lose money again. After you buy, the price falls 10%. You don't know what to do again. This is the current situation of ordinary people trading. We really want to help everyone. That's why we developed this kind of model. Okay. I also explain. This position, it is a classic accumulation zone. The box was broken. Breaking upward at this position forms accumulation. The big players accumulated enough chips. The price will rise again. What is distribution then? Take the current position as an example. Suppose at this position the price breaks the lower support. The price continues to fall further. This position is a distribution zone. That means after the stock rose more than 70%, the big players want to sell. They can't just... A lot of people have binary thinking. Very simple thinking. They think at the top after rising. When it reaches the top, the big players just smash it straight down. That's what they think is the top. A straight one-step drop to the bottom is the top. It's often this kind of movement. Rise, pull back, rise, pull back. After making a new high, it maintains a period of high-level consolidation until one day it breaks the low of the consolidation. Once this position and its low, the position is broken. Only then will the price crash. So we need to judge whether it is accumulation or distribution. I already explained earlier. Accumulation is breaking the upper main force zone. Distribution is breaking the lower support, especially after forming a consolidation range. Once this position breaks near the low, once these three lows are broken, the price will crash. It maintains the box. In this price range, after selling all the chips to you, it will smash the price. No longer maintain the oscillation. No longer buy at $227 until the price falls freely. Understand? This is how to judge box consolidation movement, whether it is distribution or accumulation. Did you understand? If you understood, type 1. Okay, this is pure dry goods. Once you learn it, when you encounter this kind of market in the future, you will know how to handle it. If you can't learn it, no problem. Just buy directly according to our AI quantitative model. Our AI quantitative model, at this position earlier, judged very early that this position is an accumulation zone. At around $228, it already told you to buy. Professional traders might. For example, I would buy at $248, but my AI model, as I said, 30 traders from Wall Street, spent several years, spent several million US dollars. To build this AI quantitative model, AI has one great advantage. It does better than you because it can trade, learn, and review 24 hours a day. But we can't. Do we need rest? AI doesn't need it. And it can capture all market orders in one day. Review, improve, optimize. So its buy points are more precise than ours. So you only need to buy according to the AI. And you can also make money. Okay. In short, taking TSMC as an example, why did the stock price fall after yesterday's earnings release? I said, real smart money will not wait until the earnings are released to buy. Real smart money started positioning very early. What we need to do is to be one step ahead. Don't wait for the news to appear. Then chase the high. Then you will most likely be the one losing money. You will be the loser. So don't be that kind of person. How do we position? I already taught you the method. Observe the candlesticks. For example, at this position, the bottoming signal appears. The bottoming signal appears. Vertical line hammers the bottom solid. Falls to an important support. Previous low violent surge level. Price action itself will also form support at this position. At the same time, observe the long-term trend. Daily time frame trend is upward. Institutions are grouping. They will not allow a crash. At key support, institutions will buy. Buying will push the price higher. I explained these things very clearly. Especially, I just added a knowledge point. In the box consolidation range, how do we judge whether it is distribution or accumulation? How to catch violent surge moves and violent crash moves? I explained everything clearly. In short, if you can't learn it, I suggest you take a good look at our AI quantitative model. Our AI quantitative model can basically buy at the lowest point, sell at the highest point, because this AI quantitative model We spent a lot of time building it. Okay, that's all for TSMC stock. Then I will talk about the second part. In the coming period, besides TSMC, what other stocks can we trade? For example, Nvidia, Google, Seagate, Broadcom, for example, Micron. These companies are all worth our attention because at the beginning of the live stream, I already told you, besides not listening to news, don't listen to insider news, the so-called insider news. Second point is how we should bet in the future. Which track should we focus on that is worth investing in for 5 years, 10 years and beyond? Which sectors are worth us heavily buying? Which leading stocks are worth our long-term tracking? This is also a key point I want to talk about today. In my opinion, I directly named the AI track. The US stock track I am most bullish on is the AI track. The AI track is definitely your investment focus for the next 5 years. It is your main investment line. If you miss this main line, then you will miss the wealth of your life. In the next live stream, I will focus on telling you the sectors in US stocks where I will place heavy bets. The AI track, okay? Do you want to hear it? If you want to hear it, smash the like button. Push the likes to 1,000. Okay. 10,000 is fine too. Like a lot. I will share more dry goods. Okay, brothers. Continuing from the previous sharing, let's keep going and look at Google. Google fully fits what I described. It belongs to the leading sector inside the AI track and is one of the leading companies inside it. In my view, it belongs to a third phase company. On the application side, for example, it's AI models, AI search, cloud computing platforms, video data, cloud infrastructure, etc. all belong to AI and have already been implemented. All kinds of AI R&D have been delivered directly into users' hands. So Google belongs to this category of companies. Okay, so we must focus heavily on it. It is a leading company in the third phase. And although its current market cap is not exactly cheap, in my view, it still has plenty of hype space left. Because I already made my view very clear earlier. AI for the next 3 to 5 years is absolutely one of the main tracks, suitable for everyone to focus on trading and investing. In US stocks for the coming period, if you focus on the AI leading stocks inside the AI sector, you won't lose money. In fact, you can make explosive gains. When others are losing money, you make a small profit. When others are making money, you make even more than them. This is the level we want to reach in trading. Actually, in previous videos, I gave an extremely precise buy point for Google. I gave the level at around $280 and bought Google there. Current stock price is around $332. This order brought me more than 19% profit in about half a month. A very solid return. I don't dare say my method will make you rich overnight. But if you use our AI model or learn my trading method and you listen to my live stream, you can at least make the profit you deserve at this position. As I explained earlier, when our AI quantitative indicator prints a blue candlestick, doesn't that represent a bottoming signal? Once the bottoming signal appears, you should no longer be shorting. What you should be thinking about is that it's time to go long or look for an early buy point. Okay, this is a bottoming signal. At the same time, pay attention to price action itself. Look forward. At this position, it rose then pulled back. The low of the consolidation. Isn't the corresponding price around $270? Around $270. This forms important support for the later trend. Because the last time the price pulled back, the lowest point where institutions push the rally becomes important support for the later trend. Because institutions review at this position, institutions will not allow it to fall quickly. Around $270 forms important support for the later trend. When the price fell to around $270, first, our AI quantitative indicator showed a bottoming signal. A blue candlestick appeared as a bottoming signal, meaning bearish momentum is insufficient. The price cannot fall any further. At the same time, price action itself, around $270, forms important later support. Because at this position, the price had a violent surge. The violent surge position creates muscle memory. Institutions will review this position. I'll say it again. Many people will also buy long positions at this position. This will push the price higher. With these two reasons, now look at the candlestick itself. What kind of candlestick is at this position? Look at this position. Price action, important support level. Blue candlestick, representing insufficient bearish momentum. Bottoming signal. Plus this candlestick. When this candlestick appears, it only means one thing. There is only one button. Buy long. Don't hesitate. Why don't hesitate? A vertical line appeared. Isn't this position a standard hammer candle? Very long lower shadow. Very small body. It hammers the bottom solid like a hammer. It nails the bottom firmly for you. And it happened at an important support level, around $270. When a hammer appears at an important support level, you should quickly buy long. Look, after buying long at this position, the price rose all the way, completely as I expected. This is exactly how we operated in the recent market, and how we led everyone to buy. If you follow my footsteps and learn the trading method, you can make money. Even if you can't learn it, if you use my AI quantitative model. At this position, the right signal appeared, the long signal appeared. Wouldn't you make money? Right? You made 20% profit. So we solved the stock selection problem. Heavily position the AI sector in US stocks. Absolutely no problem. Heavily position the leading stocks in the AI sector in US stocks. Absolutely no problem. The gains will also be very large. Then we solve the buy point problem. Now, I have also helped you solve the buy point problem. Once the buy point problem is solved, there is only one outcome for you. Making money. Everything I said is dry goods. If you can understand it, you will definitely get rich in the next 2 to 3 years. Okay, now, Google has already risen to a very important position. Why do I say Google has reached an important position? Listen to me explain it step by step. When you see this kind of candlestick, how should we handle it, right? It feels like the stock trend is very strong. But at this position, should you buy Google now? Around $330? Is it a buy or a sell? I will explain the chips at the bottom clearly to you next, and review it for you at the same time. In the future, when you encounter this kind of market, what trading method should we use? Come to this position. The stock price rose from around $270 to around $330. At this position, price action. First look at the previous butterfly pattern. Yesterday, the pattern showed two highs. Every high caused a quick pullback, right? Our indicator also told us this position was about to top. The stock price did pull back and there was indeed a crash. It crashed 5%. This time the crash directly exceeded 15%. In the end, it crashed more than 20%. An extremely exaggerated decline. Now, the price is about to reach the previous high of the butterfly pattern. The first high of the butterfly pattern is $340. The second high is $350. So this range forms what for the later trend? Important selling pressure. This position is very dangerous. The previous two crashes both happened at this position. Price won't lie to us. Volume won't lie to us. Daily and 4-hour timeframes are hard to fake. At this position, the price really did crash. Now the price is at $330. Only $10 away from $340. A 3% upside. Do you want to gamble on this $10 rise? Because in trading, I said the core is small losses and big wins. Small losses and big wins mean what? Risk-reward ratio must be high. How do we calculate risk-reward ratio? Let me insert an explanation. How to calculate risk-reward ratio at this position? For example, if you buy now at $332, the upside space, you can see is $340. Because $340 is important selling pressure. It may stop rising once it reaches $340. You need to understand this. Then if it falls instead, it can fall to $300. There will be more than 9% downside. For example, you make 2% profit, but risk 9% loss. Do you think the risk-reward ratio is okay? I'll tell you. You make $2, but risk losing $9. Would you still do it? Your loss is far greater than your potential profit. Right? Only when the risk-reward ratio is greater than 2 to 1 will we take the trade. Your ratio has turned negative. How can you do it? So, in trading, at key positions, you must calculate the risk-reward ratio. This point is also very important. Very, very important. Did you understand? Okay, so how should we handle the current price? It has already approached the high of the butterfly pattern I mentioned, which is also the previous two times. Let me turn off the indicator. The previous two rebound highs were pulled back. So our indicator automatically marked it. You don't even need to find it yourself. You don't need to review the chart yourself. Once the indicator is on, it appears directly. The high of the butterfly pattern forms selling pressure. When it approaches these two highs, you need to be careful of a stock pullback. This is the simple usage, right? Now, I turn off the indicator. Even without the indicator, you can see it. At this high, the stock price pulled back, forming resistance. At this high, although it broke the previous high, a big bearish candle smashed down. I said before, after a new high, if the stock price falls back quickly, and a big bearish candle smashes lower, what signal is that? Price made a new high. but could not hold it, printed an inverted hammer, or printed a big bearish candle smashing lower. What signal is that? Isn't it a serious dangerous signal? Isn't it a serious bearish signal? At this position, what should we do? Shouldn't we sell? Right? After selling, this position forms selling pressure. The stock price really pulled back a lot, right? The stock price even crashed more than 20%. I said the lowest drop exceeded 20%. So these two levels form a range, which is the main force zone. The main force zone will suppress the later trend. Look, now the stock price is about to reach the $340 or $350 range. At this position, the candlestick has already closed a bearish candle. See it? This week, I will not go long Google at $330. Even though I am very bullish on it, I said Google, as a third-phase leading company in the AI sector. In the long term, trading, it will definitely make you a lot of money. This is the first cognitive issue we need to solve. The second issue is solving the buy point problem. I said I am bullish on it. That does not mean I will buy randomly. That is what ordinary investors do. I want to wait for a very good buy point. So we wait for the stock price to pull back. Now it is facing important selling pressure. And the candlestick printed a bearish candle. So this week, the stock price will most likely oscillate between $330 and $340 until the price falls. When there is a clear drop, we can follow and short or sell our bottom spot position. The indicator gave a buy at $300. Around $300, the indicator told us to buy. Now, at $330, we are already making a killing, right? So, this is the action we will take with Google right now. Just watch it. Facing this important selling pressure area, how should we respond? We observe the price behavior around the important selling pressure. So this week, Google is also at a very important position. Once the stock price falls, at least down to this position, around $300, only then will I consider buying. Because around $300 is an important support level. This position is worth buying. Okay, if it goes even lower, then the next medium-term support. Important support around $270. So open our indicator. If this week the price walks this kind of pattern at this position, you need to pay attention. It attacks to $340, then smashes down quickly. Cannot break $340 on the rebound, then smashes down again. Rebounds again, then smashes down again. If it walks this kind of movement, okay, please open your eyes wide. When this movement appears, do not go long anymore. It is very dangerous. Understand? When this kind of candlestick movement appears, you should take profit or switch to shorting. This is one possible script. The second script is a direct breakout above $350 with not too big a pullback, does not break $340, then continues rising. Pulls back again but does not break $350, then rises again until it makes a new high. But if it walks this kind of movement, we can buy at the low of the pullback and still make enough money. Did you understand? This is the response plan I will use for Google this week. Why did I say earlier when talking about the step opinion? Don't chase highs. Don't listen to news. Don't blindly chase because of some positive news. You will most likely lose money. You should only buy when the stock price pulls back or when there is a key breakout. For example, box breakout, downtrend channel breakout. I already explained earlier. Only buy at key breakouts. Don't buy during normal short-term pumps because it is very dangerous and you will get stuck at the high and suffer losses. This is Google's current movement. I explained it very clearly to everyone. Now let's look back again. Why did I say don't chase highs randomly? Because some news is fake news. It will make you lose money. Breakouts can only be traded in two situations. One is when the stock price is in box consolidation. Let me demonstrate. I already explained earlier. Box consolidation. High-level box consolidation. I said we focus on two levels. One is the upper main force breakout. One is the lower support breakdown. Main force breakout with volume expansion breakout. Okay, our indicator already told you. This is a volume expansion breakout. I said good. The orange-yellow candlestick means bullish momentum is very strong. Volume expansion breakout. Price surges violently. At this time, doing the breakout is fine. Direct explosive gain of 16%. If it breaks lower, you short, right? Plus you pick the right stock. Most likely the breakout is real. Plus our AI quantitative indicator tells you this is a volume expansion breakout. You buy and make money, right? Only at this time can you do the breakout. Only then can you chase the high. Normally, how do you chase? Normally, you chase just because of one piece of news. Just like TSMC I mentioned earlier. Yesterday after earnings were released, you bought and the price instantly fell 5%. How do you play? What do you play with? So even breakouts need to be done the right way, not blindly chasing. No matter how bullish you are on the company, I already picked the stock for you. You still need to find a good buy point. Okay, at this position, let me explain again. Google's current movement. At this position, actually bullish momentum has already appeared. Even though bullish momentum appeared, that's why I still haven't sold my bottom position. You can also see, after I bought around $270, our indicator has not yet given a sell signal. No sell signal has appeared. The core reason is that the orange-yellow candlestick has appeared, meaning bullish momentum is still quite strong. We can still hold a bit longer, but I have a feeling that this week it will give a sell or hold signal. Because this indicator was developed by us, we know it very well. So around $340 this week. It will most likely be a short-term sell, short position. Okay, let me summarize for everyone. The reason the buy point appeared, but the sell point has not come out yet, is that bullish momentum is still quite strong. But it is getting close, because it is approaching the previous high, the high of the butterfly pattern. Okay, now let's look at Google's long-term trend. Daily time frame. Fund level. Why do I say the AI sector is worth heavily positioning? Because capital has already voted with its feet. The facts are right in front of you. You just don't want to admit it. You can't read it, so you can't make money. That's why in today's live stream I told you, the leading companies in the AI sector are worth your focused trading for the next 3 years. If you understand everything I said, in 3 years, you will come thank me. I will continue. Through Google's daily time frame movement, how to see the flow of big capital, how to see which sector in US stocks is currently most worth trading. Why is it AI? Come, for example, at this position. Google's movement in recent years has shown a very standard rising trend. Why do I say it is very standard? I explained earlier. The characteristic of leading companies is constantly making new highs. Pullback highs keep making higher highs. Pullback highs keep making higher highs. Pullback highs keep making higher highs, right? Lows are also making higher lows. Look at this movement. It is a very standard leading stock movement. In the previous live stream, I already said, when Google walks this kind of movement, it means it is the leader of the AI sector and also a leader in the entire US stock market. What we want to catch are leading companies. Catch the leading company. Buy at the low during pullbacks and wait for explosive gains. Come. I mark this movement for everyone. Move it over. This movement is exactly the same as Google's movement. See it? Exactly the same movement. From now on, you only need to remember, highs keep making higher highs. Wait, I will show everyone. Highs making higher highs. Lows also lifting higher. This is the typical movement of a leading company. At this position, Google's high went from $144 to $183. Pullback, low, $166. Then rose to new high, $200. Pullback low, $190. Highs keep getting higher. Lows also lifting higher, right? This is a standard uptrend. As long as you catch this kind of movement, you can make a lot of money. And you can understand the market's main line, the market's leading stocks, where the market's capital is currently concentrating. It is concentrating on stocks that walk this kind of movement. And Google is the standard example of this movement, when its stock price was still at $190. We already knew it was the leading company in the AI sector, and also a leading stock in US stocks. A sector leader company, buying it, we can definitely make money. This is our judgment standard. At the same time, look clearly at our AI quantitative model. There will be an uptrend channel. See this uptrend channel? Google's stock price has stayed above the uptrend channel for a long time. It only means the stock price is extremely strong. This kind of company is worth you buying, worth you trading long term. So if you have our AI quantitative model, you don't even need to judge anymore. The AI model directly tells you how to operate. At the same time, look at our Bollinger Band channel. This Bollinger Band channel. Did you notice? Google's stock price has stayed near the upper band of the Bollinger Band channel for a long time. The red line. See it? The upper rail of the Bollinger Band channel, it has been running near this upper rail. Rarely falls to the lower rail. Except this time because of the US-Iran war, which caused the stock to fall to the lower rail. It has basically stayed on the upper rail of the Bollinger Band channel, maintaining a strong trend. If a stock shows this kind of movement, remember, if you understand Bollinger Band trading, when you see its stock price staying near the upper rail, it only means this stock is extremely strong, a leading stock in the market. The stock most worth your trading in the market is this one. Of course, I don't need you to judge. Our AI quantitative model has already done it. You don't need to judge, right? At this position, it automatically draws the Bollinger Band channel for you. See it? It keeps rising along this channel. So through these judgment standards, when Google was at $190, $170, or even $160, I already knew Google was a leading stock. If you pick the right stock early, later you will make explosive gains. Okay? Casually doubling your money is easy. Okay, plus it is in the AI sector. I said, the entire AI sector trend is the trend for the next 5 years, even 10 years. Right now, all the smart money, smart capital and institutions in the market are buying AI. These two things combined, plus its own price performance, is enough for me to judge it is an awesome stock. Enough to judge it is the market's leading riser, with very big potential. Then we only need to solve the buy point problem. For example, butterfly pattern breakout buy, high level box breakout buy. At the same time, watch our AI indicator. When it shows very strong bullish momentum, then how could you not make money, right? For example, at this position, butterfly pattern. I said what to do at the low of the butterfly pattern. Let me explain it again directly. The low of the butterfly pattern is the bottom. Two lows form a double bottom. The price will rise directly. The high of the butterfly pattern forms the top. The price will most likely fall. Did you understand? Remember, once you have my indicator, you just look for butterfly pattern. High stock price pulls back and crashes. Butterfly pattern. High stock price pulls back and crashes. Right? Butterfly pattern. Two lows. Stock price surges violently. Stock price surges violently. Master this one move and you eat everything. Once you fully understand our indicator, how could you not make money? Not making money is impossible. The only thing to fear is that you have the indicator but don't use it. Then I can't help you. I also can't guarantee that just because you have the indicator, you will definitely make money. Because the core of trading still depends on yourself. For example, at this position, didn't the butterfly pattern bottom rise? Butterfly pattern bottom rises, high pulls back, bottom rises, high pulls back, bottom rises. Right? These, could they lie to you? These things, did we just make them up out of thin air? The facts are right in front of us. Okay, we don't need to make anything up. Okay, now back to Google. The current situation is the same. Pullback, high rises, pullback, high pulls back, right? All extremely precise levels. You only need to strictly execute and you can make money. This is just Google. Finally, let me talk about one more sector we need to focus on. It is also AI related, which is the AI storage sector. Earlier, I talked about Nvidia, TSMC. They belong to first phase stocks in AI, leading stocks, doing chip R&D. Chip foundries, these processing ones, still belong to first phase leading stocks. Google belongs to third phase application side. For example, cloud computing platforms, application layer, AI models, AI agents, right? Various video data, cloud infrastructure. This belongs to the application side. Now let me talk about the second phase, which is also a very powerful sector in the AI track, the storage sector. AI will always be short of storage. You have to believe a huge amount of data needs to be stored. Okay, so the leading company, Seagate, also needs heavy focus. Now, let's look at Seagate. Its daily time frame movement. Its movement has already verified my view, from $70 to $500. Gain exceeded 600%. Capital has already told you, it is a leading stock. Later, you should focus your eyes on Seagate and companies related to Seagate. Seagate will absolutely help you make money. Okay, Seagate is absolutely a leading company in the third phase of AI. Look at this position. From the bottom, it rose to $500. 6x gain. Facing this kind of movement, how to operate the current stock price? On the daily time frame, Seagate's stock price has already made a new high, and bullish momentum is quite strong. Then, we must pay attention to the performance after the new high. I explained earlier, when the stock makes a new high, we need to watch whether it prints a big bearish candle or an inverted hammer. As long as either of these two patterns appears, you should pay attention. The stock price may pull back because I said big players cannot pump 90 degrees straight up for you. It is impossible to keep pumping without any pullback. Big players most likely do new high then pullback, then new high, pullback, then new high again. They walk this kind of movement, so you need to avoid losing money during these pullbacks. Therefore, we need to watch the price behavior after the new high. Brothers, okay, continuing. This week, I want to watch after Seagate stock makes a new high, whether it can hold a new high, whether Seagate can withstand the pullback pressure. Understand? Look at the 4-hour time frame. On the 4-hour time frame for now, it is near the new high and has not yet shown the inverted hammer I mentioned, or a volume expansion, big drop bearish candle. So it is not particularly scary yet. But at this position, it has already started a small level box consolidation. So at this position, we also need to be careful. Yeah, we need to be a bit careful. Although it is not particularly dangerous, we still need to be careful. Our indicator has also shown a short-term pullback signal. So this week, Seagate stock price is very important. Seagate. If the stock price can stay above $530 and not fall, then I believe it can continue to make new highs. If this week, this company's stock breaks the $500 round number, breaks this level. If the $500 round number is broken, in the bottom of this small consolidation may see a larger correction. This is the movement deduction for Seagate. If a correction happens, that is your buying opportunity. Look at Seagate. Our short-term buy point was at $360, bought at $360. Now, the current stock price has also risen more than 40%, close to 50% profit. At the current stock price, we need to be careful. Whether it prints the two kinds of candlesticks I mentioned earlier, volume expansion dropping bearish candle, or a wicking inverted hammer, we need to be careful. If it makes a new high but cannot hold it, that is a dangerous signal. I already explained it. Okay, I will also explain why our indicator gave a $350 buy point and made explosive 40% profit. What is the reason? Okay, I said before, for stocks in high-level consolidation, what should we pay attention to? Box consolidation range. Draw out the box consolidation range. Look at this position. After the violent surge, the stock price started high-level consolidation, right? High-level consolidation, high, high, low, high, low. Okay, I mentioned two operation methods. When it breaks the main force level of the high-level box consolidation, what should you do? Volume expansion breakout. What should you do? Think about it. Shouldn't volume expansion breakout mean buy? At this position, at the same time, our indicator told us the color turned orange-yellow. Doesn't that mean volume expanded? Volume expansion breakout buy. Stock price rose 20%. Didn't you make money? This is the method I taught you. Now look again at our AI quantitative indicator. During this high-level consolidation, it judged in advance that it was an accumulation zone. It was faster and more accurate than us. It bought Seagate stock around $350. Current profit exceeds 50%. For example, if you have our AI quantitative model, you don't even need to learn anymore. The trading system that we traders spent 10 or 20 years polishing, you can learn in one day. This is AI. Okay, why am I bullish on the AI sector in US stocks? This is also one of the reasons. Ordinary people can use AI tools to achieve many things that would take you 10, 20 years to do. So AI companies are worth investing in. And you can also use AI tools to do investing well. Understand? So AI is very important. I'll give everyone 10 seconds to think. If it were you, without our indicator, how should you operate in this kind of market? Think about it. Okay, let me review how we operate. How do we judge? And how will our indicator operate? Right? This segment of the market, after you get it, is your first instinct to go long or short, right? When the stock walks this kind of movement, after you lose money back and forth, buy then lose, short then lose. Short and long both lose. How should you operate? Most likely, your operation logic is seeing the stock rise, buy, then it falls, and you stop loss. After stop loss, buy again. After it rises, buy again, stop loss again. Short at the low, long at the high, lose money back and forth. This is your operation. If I didn't get it right, then look at whether your wallet made money. If your wallet didn't make money, then it proves I was right. Okay, but our operation is very simple. I already said, first, with Seagate, you need to know, it is the second phase leader in the AI sector. It belongs to the storage sector. It is a leading stock in the AI sector. Strong fundamentals, long-term upside potential. So I mainly go long, with short as secondary. So long positions are definitely more. At the same time, after a violent surge and high-level box consolidation, export the main force zone. Export the support zone, right? Main force zone is here, around $460. Support zone, around $390. As long as it breaks the upper main force zone with volume, go long directly. If it breaks lower, around $380, around $390. At this position, go short. Okay, wait for breakout, wait for breakdown. At this position then, it appeared, at this position, it was about to break. $380 was broken. Okay, go short directly. Short in, short as main. This trade made 7% profit, right? made 7% profit. Okay, it returned to this range again. Return to this range again. I just wait for it to break lower again or break higher again. And I trade, right? Okay, wait. Wait while it is still running inside this range. At this position, short-term short, long-term long. I said because I am bullish on the AI sector. So I will mainly long, short as secondary. I said it in advance. So at this position, short-term, short as main. Short made profit. Exit directly and wait for breakout. After breakout, what? Buy directly, right? After buying, did the stock price rise? Look at this position. Stock price rose 2%, 3%. Maybe this order didn't make much money, but it also didn't lose much. Okay, no problem. Now, the two orders are both break even. Look further back. Further back at this position, it broke again, right? Buy again. Then look at the latest stock movement. Direct violent surge. This order can let me make 30% profit. The previous two orders at this position, short made 7%. At this position, long made 2%. Maybe later it loses 3%. I would stop loss. Because it fell back into this range, I would stop loss. Then the previous two orders would be break even. But this order, one order made 30%. Didn't I make money, right? This is just the method I taught you. First, I picked the right stock. Second, I understood the movement, found a good buy point. Then, actually, you only need to use our AI quantitative model, and you can do it. At this position, two short signals appeared. Stock price started to pull back. After the pullback, ignore the middle position until our indicator at this position monitored. It fell to an important support level. Institutional long level. Important support level. For example, this position important support. Why important support? This uptrend channel. See it? This uptrend channel. Stock price fell to the upper edge of the uptrend channel. I said earlier, falling to the upper edge of the uptrend channel forms support. At the same time, it is also previous low support. At the same time, this position is also a long signal. So our AI model went long directly at $354. Stock price surged violently. Upside space exceeded 50%. So you don't need to learn. You don't need to think. You only need to remember AI. By AI leading companies. And you can make explosive gains. Today, I actually shared a lot of dry goods. I'm not sure if you can all understand because I shared too much dry goods. I talk about many trading methods that only institutions use. I talked about our AI model, which is also a professional model only institutions use. If you really can't learn it, if you really don't have time to learn, you don't understand, and you keep losing money, then I suggest you take a good look at our AI quantitative model. You can click on my homepage. My homepage has the link to the AI quantitative model. You can claim it for free and try it. Okay, today's entire sharing is all to help everyone make money. Today, I already shared a lot of dry goods. If you understood what I shared, learned my operation logic, you will definitely make money in the future. Understand? Even if you can't learn it. Right now, the AI sector, the leading stocks in the AI sector, are still worth you heavily buying and holding long term. This is the simplest method. But if you want to make more money, you need to use the correct method to buy these quality companies. The correct method. For example, all the methods I just taught, you can learn them. If you really can't learn them, then just use the AI model. Because now AI can trade for you. AI can learn my trading system, our team's trading system, various top traders' trading systems in one day. Then trade for you 24 hours. Isn't that great? The trading methods you couldn't learn in 10 years or 20 years. AI can learn for you in one day. You only need to use AI to open our model. Open the model. It automatically